While modern finance has entered a golden age with advancements in systems, technology, services, and risk prevention, the value system has skewed towards profit over ethics. To prevent future financial crises like the 2008 US subprime collapse, we must return to the cultural roots of finance. Financial culture is the true foundation for sustainable development and firm competitiveness. Policy recommendations for modern financial culture development. First, uphold integrity in client relations. Financial institutions must prioritize integrity and trust, placing sincerity and trustworthiness at the forefront of customer relations. A. Genuine, transparent service. Banks should uphold sincerity as a fundamental principle. Employees must openly communicate the advantages and disadvantages of financial products, striving to achieve the highest standard of honest and transparent service. B. Customer-centric innovations. Institutions should focus on customers as their operational core, continually innovating financial products and improving service quality to offer secure, efficient, and convenient financial services. C. Long-term customer relationships. Banks must prioritize long-term trust and strategic partnerships over short-term transactions. Maintaining integrity, even at the cost of minor short-term losses, strengthens brand reputation and ensures enduring customer loyalty. Second, adopt a people-oriented approach. Historically, management theories evolved from experience-based to scientifically driven, eventually culminating in culturally oriented approaches emphasizing people above assets. Modern financial institutions should adopt a similarly people-oriented philosophy. Shanxi票号historically valued talent highly in its selection and management processes. Citibank provides a modern example, strongly emphasizing the role of talented employees in driving corporate success. Drawing from these examples, financial institutions today should A. Prioritize employee welfare. Banks must care for, respect, and motivate employees, meeting their diverse needs and providing platforms for professional growth and personal fulfillment. B. Customer-centered service philosophy. Employees should embrace a sincere, flexible service philosophy towards customers, creating environments that give employees a sense of belonging and customers an inviting, comfortable experience. Third, correctly balance ethics and profit. Shanxi票号historically balanced ethics and profit effectively, refusing unethical gains. Modern financial institutions must similarly navigate ethical dilemmas responsibly, prioritizing righteousness and ethical profitability to meet societal demands. Specific measures include A. Resource allocation. Banks should guide investment strategically, supporting competitive sectors and weaker enterprises. Balancing economic and social interests can optimize resource allocation and facilitate balanced economic growth. B. Support small businesses. Addressing financial difficulties for small and micro enterprises, banks must actively support these businesses through targeted measures aiding local economic development. This is similar to giving microloans to impoverished demographics, resulting in significant economic growth historically in many countries. C. Enhancing risk control. Given the high inherent risks in finance, banks must strictly manage operational, credit, interest rate, and market risks. Integrating rigorous risk control into daily operations helps safeguard national economic stability and social harmony. Fourth, cultivate correct value orientation. Financial culture construction is a long-term task. The pursuit of reckless and unsustainable growth must be curbed. Institutions should reflect on whether they've sacrificed foundational values for size and speed of growth. Like long-distance runners, financial firms should prioritize endurance and sustainability. Enterprises must align profits with public welfare, ethics, and legality, adopting a long-term view. Financial culture is the soul and core driver of the financial industry. This paper centers around the study of financial culture, analyzing Shanxi票号from a historical perspective, thereby reaching several conclusions. First, financial culture is an organic fusion of finance and values. It includes both hard elements, such as tools, systems, and innovation, and soft elements, such as values, ethics, and social responsibility. Second, the success of Shanxi draft banks was inseparable from the values of integrity, trust, righteousness, and profit instilled by traditional Shanxi merchant culture. Third, the four values of integrity, trust, righteousness, and profit are interlinked. Integrity as the foundation, trust as its expression, righteousness as the guide, and profit as the result. Fourth, modern financial institutions still rely on these same principles, being integrity, trust, righteousness, and profit, to build brand, deliver excellent service, and drive innovation. Fifth, despite progress, modern financial culture often lacks genuine implementation. Reform must look to history, especially the values embodied by Shanxi draft banks. Sixth and lastly, in their final years, draft banks faltered not due to their values, but because their descendants abandoned these principles, succumbing to decadence and stagnation. The fall of Shanxi draft banks teaches a lasting lesson. Values must be preserved and renewed through each generation. This marks the end of our exploration through the history of Shanxi draft banks, the ancient Chinese banking system. We learned how they came to be, how they operate, how they fell, and what implications they have on the world today. If you missed any previous episodes, make sure to watch them, and as always, remember to like and subscribe. I'll see you guys next time.